so much going on at the moment, and it's just crazy. It's just mind-boggling at the moment. But yeah, we're getting there, and to be honest with you, that's the drive, isn't it? Getting excited with all these type of projects and things. So it's been good, but it's hectic.
Well, what I thought I wanted to sort of tap into your extensive knowledge bank around is the kind of industrial space, investing in industrial kind of warehousing, storage, that kind of thing. It's a little bit more of a, well, I guess anyone who's coming from a resi perspective, it's a bit more of a niche kind of thing, and it would be really useful to get your insight into kind of the industrial opportunity and whether or not you still see there being opportunities in that space, and if so, how you're finding them and that sort of thing, really.
Well, yeah, Mark, industrials are really, it's a complex subject, and it's something that I love and I've always loved for a long time. And it's something that I focus on quite a bit with at the moment.
Yeah.
The benefits that we've got with commercial, one of the huge benefits that we have is over the statistics over the years, whenever there's been a market crash or there's ever been any kind of up or down in the market, any kind of difficult times like 2007, 2008, it's always known that industrial is the last item to ever be affected on the pyramid. So even though commercial is on our buy-to-let pyramid or our portfolio pyramid, it's quite high up with the risk factor.
Yeah,
it's true, but at the same time, it is one of the safest as well. So whenever like we've had the pandemic now, and we've got buy-to-lets on the portfolio, we've also got obviously commercial tenants as well. Touch wood, the only issues that we really faced was the buy-to-lets in the general public. Because the businesses have got a business mindset and they want to get through that the rough patch that they're in. So that on its own is quite powerful. And the second thing is just looking at the shortage of industrial space in the UK is ridiculous. Like we need to fill that in. All the businesses are all moving from high street into e-commerce. E-commerce requires warehouses. So it's kind of the biggest trend, if you're looking at the overall market, the biggest people in the market is Amazon. Amazon, eBay, all these sellers who are on there are actually private sellers, private businesses that are set up selling their products on these platforms. And these guys need warehouses so that they can do their work. And then we're basically piggybacking off these big boys in the market. In my eyes, it's going to be growing. In my eyes, that's the way the market is going to be changing over the next few years. It's all going to become more and more e-commerce based. It's all going to become more and more delivery to your house, next day delivery. And as all that increases, we're going to need more industrial space to cover that.
Yeah, that makes a lot of sense. And it's interesting that you sort of tied it in with trends in e-commerce, because that's only going to grow, isn't it? That's such a boom industry at the moment. Where, as investors, does the opportunity lie for us? Like, where are you finding deals? Like, through agents or off market? Where would someone start to look for opportunities like that? And how would they decide if it's a deal or not a deal, I guess?
Yeah. Well, the bottom line is with commercial, and that's why commercial comes higher up in the pyramid as risky, because the bottom line is you can't do this on your own. And it doesn't matter who says that we can go out and do this on our own. This is something that we need our power team. And in commercial property, your power team is basically you need them. They're your right-hand men, and they need to be on board, and we need them to basically find us the opportunities, find us all the information that we need to protect us and make sure that this project is going to be the right one. So the first question that you've asked me is sourcing opportunities. There's loads of ways. There's loads of ways that we could do that. The market is hot, right? This is another one going back to why do industrial. The market is really hot at the moment. And the reason that the market is hot is because it's a safe game. And then we've got all the pension funds. Like I've been out and about on the mentorships and things, and we've been in Essex, and we've seen pension funds over in Essex working at a 3% yield. So if they're paying a 3% yield, like how can we ever compete with them? But then at the same time, because they're putting all this money into investment, there's all these new sheds going up in the area. With the new sheds going up, their prices and square footage prices are much higher. Their build costs are higher, which automatically then pushes up the prices for the old stock. The new warehouses will be renting out, for example, £12-13 a square foot, and then the existing warehouses will then start pushing their prices up as well. So it actually works quite well when the demand is strong. It's not like we need hundreds of these deals. We own,
Yeah.
even if we can tick over and get one added to the portfolio over a 12-month period, that's minimum 4, 5, 6, 7,000 pound per month
Yeah.
income, net cash flow coming in. And most of the products at the moment on the market, which are on open market, are actually selling way over the market value. For me, the best way to be doing it is once you've got your power team in place, you'll have your commercial agents.
Yeah.
Get in that relationship. It does not matter who you are, if you're brand new in property or if you've been in property for years, get viewings booked in for commercial property. Meet the agents. Don't look online. Don't phone them. Book in a viewing for anything. If it works, it doesn't work, just book in a viewing. Once you build that rapport with the agents, start chatting to them, get a good understanding with 2, 3, 4 agents, see who your personality matches with.
Yeah.
Right? Once you've got that match and you bond with the person that you're out and about with, that's when the opportunities start coming. Right. And then the biggest benefit that we've got in commercial property is we can then pay our agents. Like the agents can work for us as a sourcing agent. We can pay one commercial agent, for example, a 1% fee. And the benefits that we've got with doing that is they already work with other commercial agents who are out there. So they'll
Yeah.
be sending them emails saying, we've got a client who's looking for XYZ. Do you
Yeah.
have anything on the market or coming to the market or anything which is totally off market that you think could work for them?
Once you found one that you work well with and you've got rapport with, do you consider them to be part of your power team?
Of course, that's one
Yeah.
of your main ones. Like we go through that on the course, on the commercial course and the implementers and things. The most important thing is your power team. And
Yeah.
we've got about 10 people which are on the power team. And it's
Yeah.
quite funny because every person that is involved in the commercial property links back to your commercial agent. So your
Yeah.
valuation is done by your bank, but it's you get to choose in commercial property who the bank's going to use to survey the property.
Yeah. Yeah.
So you're a commercial agent. So we get to choose that commercial agent again, right?
Yeah.
We want to get a valuation done before we buy the property. So again, having that report with them
Yeah.
and the business will we can get them to go out and do the first valuation for us,
Yeah.
right? And then give us an indication of what the rentals are going to be. And then the same agents have an in-house rental market. So they'll or management, you could say, letting management. Most of these commercial agents have the letting department in-house. So once they've bought you the property, they've got that long-term income coming in with you as well because you're paying them a monthly fee, 5% or whatever it is of the rent. So
Yeah.
they've got that long-term relationship with you.
This is one of the things that I think makes the difference, or is one of the fundamental differences between coming from a resi background and coming from a commercial background. Like you put work into finding the right agent, and then you consider them to be absolutely pivotal member of your team. In resi, I don't think I'd ever describe an agent as like part of my power team. They're like a necessary evil. They're like, I have to go to an agent because they've got all the deals and they're a pain to deal with and what have you. They're not really part of my team. I still get a good relationship with them, but it's not quite the same. And that's why I think some people maybe find commercial a little bit daunting to get into because like it is quite a close-knit thing, isn't it? And that's where you've got to get to, is where the agents are working for you. Whereas like anyone can walk into an estate agent for resi and just say, look, I need to buy a house in this area. And they're not part of your team. They're just they're selling you a deal that they would sell to anybody, kind of thing.
You're basically using just a quick service off them, and you're just like anyone else. And then, but when you've bought 3, 4, 5 properties off them, they'll start sending you deals off market here and there. But overall, you're 100% right. It's a totally different game. So I think having that commercial agent basically answers all questions for anyone who wants to get into commercial property. Is building that power team, getting the right commercial agents on board.
Do you personally have like a model you follow? So you're looking at a big empty space. Do you carve that up and then break that down to different tenants, or do you just base it on square footage and rent it as it is? What's sort of your approach to the industrial stuff that you've got?
So because we're now more and more like experienced and we're doing a lot more deals and things now, so basically we'll kind of work with our agents again with what their demand is.
And
So if they turn around and say to us, look, we need a warehouse in this area because we've got a tenant that's looking, fine, we'll go out there and find something for them. or they'll find us something which we'll buy and they'll fill up. But
Yeah.
most of the time when we're going in, we will assess something like a whatever size, 40, 50, 60,000 square foot unit is lying empty. Why is it lying empty? Is there a demand for 50,000 square foot units in this area, or are they small businesses? And then
Yeah.
if it is small units that is required in that area, and that's what people want, and then we'll look to basically make small warehouses in in that one building, and it will just be multiple units under the one roof. It's a lot easier than your residential developments. You still have to go through your planning, your building warrants, but overall the work's a lot less.
Yeah.
But what we will be looking at what the demand is. So once we've bought the unit or we've got it under our control, so under an option agreement or under a purchase agreement, we'll advertise from day one. You'll probably notice when you're out and about, most of the signboards that you see outside will say from 1,000 square foot up to 20,000 square foot. And the
Yeah.
reason that that's done is because they'll carve it up to what your requirements are.
Right. Got you. Yeah, I
Yeah.
have seen that.
Yeah.
Yeah. Okay.
But at the end of the day, it all comes down to your market research and your understanding of what is required in that area.
We talk till we're blue in the face on the podcast, and obviously with students and coaching clients about the buy, refurbish, refinance model. So do work to a property, do it up, add
Yeah.
value to it, refinance, pull some of your money out. Does that model exist within this kind of space? Is there scope to sort of add value and refinance, or is this this more of a yield situation?
If I can be honest with you, this model works a lot quicker. In commercial property, what we will be doing is we're buying it at the bricks and mortar value. We're then adding value, even if we do not spend a pound on the property, we rent that out. So even as an example, if you're looking at a warehouse which is worth £100,000, 10,000 square foot unit, and you manage to get that rented out for £3 a square foot, right? So that's £30,000 per annum as income. So we could look at a commercial valuation of about 280, 300,000. It could be more, it could be less. As a very, very basic calculation, but then that's where your Rick surveyor and your commercial team come on board. So we would say to them, right, okay, this warehouse is worth 100,000 now, but I'm going to put a tenant in here, sign up a 5-year FRI lease. Once the lease is in place, what is this going to value at? Our bank manager was out the other day from Bank of Scotland, and a couple of points that he said, one of the units that we've got, we were thinking that would be worth about £1,000,000. But then he's sitting there saying, I would say with the rentals that we've got, we could probably push up to about 1.4, 1.5.
Wow.
And that's the bank manager giving us this information.
Mm.
That means it could be possible that we could push this into a pension because the loan to value is now going to be like under 50% or whatever.
Okay.
Right. Yeah. And then loads of doors start opening up. Can we refinance? Can we pull money out? And and that building that we're talking about probably cost us about 600,000 in total. Right. So over a 6-year period, 5-year period is now like tripled itself in the value.
Yeah.
What residential property can you buy, right, and triple its value over 5 years? Like I've never done it in buy to lets or residential.
Yeah.
Right. Whereas with commercial, that's possible. So I think for us as property investors, having that knowledge and understanding, it shows us that this is a safe place for us to put our money.
Yeah.
And our investors' money.
How critical do you think it is for somebody to have investment experience, resi investment experience prior to getting into commercial investments like this? Do you think that's critical or recommended, or what's your take on that?
I started off in commercial, right? Yeah. Okay, it wasn't a choice, but I've done it.
Yeah.
And I've seen a lot of our mentees who have got nothing and they've done it. And that all comes back down to your power team. So working with people that we've got experience with, that we know that can pull it off. The bottom line that the bank's looking at in commercial property is the serviceability. So if you're buying this, how are you going to pay the money back to us? And how strong is this? So the loan to value needs to be good. Like there are banks that might offer you 75, 80%, stick to the 60, 65%. And the reason is that's a good number for stress testing, especially with the current climate. That's really important. And then it comes down to your serviceability. So you want to make sure whatever your debt service charge is going to be, we're going to have your overall, so your repayment for the year, whatever that amount is going to be, you want to make sure you're at least 125%, like 1.25% as a calculation over. so that your serviceability is never ever going to be an issue. So if the bank does, if the market, well, some people are saying the market's crashed, the market's crashing, and all the usual stuff with the current climate. If we make sure that we haven't went over the 65% for the loan to value, and we've got over a 25% serviceability, the bank isn't going to want to repossess you. They're not going to want to pull the loan from you. If your money is put into industrial, commercial, or any type of commercial property, you want to just make sure that the loan to value is never going to be pushed over the limits to get the deal done. And you always want to make sure that your debt charge ratio is over the 25%. Like we've got Shay's one that she's doing through the implementer that she's done, and she's cash flowing £8,000 a month. Yes, she's got challenges. Yes, she's been at it for the last 6 months trying to get this deal through. Once she's got it and she can pull this off, I know that will be a cash cow for her. It's like when you start doing your comparisons, apple for apple, the stress that you're taking on, like you can't get the same rewards with the buy-to-lets. It's impossible.
Yeah, for a little bit more stress, but essentially, like you say, the same process, just maybe a couple more zeros on the end and a little bit more time, but the process is the same. Your results are exponentially better. Yeah, I get exactly where you're coming from on that front.
And one more thing that I can add for you about the sourcing side that we were chatting about is just similar to what we're doing in the residential side, and we talk about at PWS. It's just off-market deals. And basically what we're doing is with the pandemic, you've seen so many people taking bounce back loans and recovery loans, and they're now got debt coming out from all over, and they can't service these. And now all the companies are closing down. So what we're basically offering them is, look, we'll buy the property off you. Once we've bought it, we'll rent it back to you on a 10-year period. So we're buying the property at bricks and mortar price. We're sticking a lease in place before, as and when the exchange is happening through the legals. So we're basically putting in a commercial value on day one. From there, the tenant has been there for X amount of years. He's ran his business for X amount of years. He's now got a capital injection to pay off all his loans, all his debts. They're saving mega bucks. The rent's 100% deductible, tax deductible. So then they claim that off, and then they can put other conditions in there, right? Okay, can you do a refurb for us, or can you do this for us? Spend a little bit of money and make the place look a little bit nicer. Whatever the conditions are, right? But overall, it's a win-win-win scenario. Another big benefit that we've got with these, your accountants, they're there. Everyone's got an accountant or knows an accountant, and the accountants look after everyone's books. So if we start speaking to our accountants and saying, is your client in a position that they need capital injection, let us know. If they own the property, let us know. Because we have got an opportunity out there, and it's just create a little PDF, show them what you're doing, and show them the win-win situation, and then you'll see the phone starts ringing from your accountant.
I mean, it's really interesting that you talk about identifying pain points and finding win-win situations, because that applies to any strategy, doesn't it? And I think that there's some really good practical tips there for anybody that's thinking about this as a strategy. So alongside kind of driving the area, looking around at units in your area and what's going on, and I guess speaking to commercial agents in the area, would you say they're the best first steps for someone to take? So if someone's interested in getting into this, that's the two things they should be doing, right?
100%. You hit the nail on the head there. The first thing that I would do is I wouldn't even speak to the agent too much on the phone. I would just book in a viewing and go and have a look at properties. Once you're there face to face, it's totally different to being on the phone. And get out there and drive the industrial unit, see what's lying empty. I would say that's fantastic 2 ways to get started.
Fantastic. Thank you, Asaad, so much. It's always so much content, speaking to you, and so much knowledge to tap into. So I know everyone will have found that really useful, and it will have whetted a lot of appetites, I know, for this, which is quite an interesting space to be getting into. So thank you so much for that. Thank you for your time.
Thank you.
Thanks, Asaad. Take care. I'll speak to you soon.
Take care. Bye-bye.
Cheers.